Hello and welcome to C-Suite Secrets. I'm Heather Parsons, your host, a serial entrepreneur, fractional CFO, and a business strategist. I've spent years juggling finance, business, family life, all while helping entrepreneurs scale, optimize cash flow, and build real financial success. On our show, we bring you real conversations with founders, executives, and operators who actually move the needle in their business. No fluff, no filler, just smart strategy, systems that work, and insights that you can put to use right away. With that, let's dive right in. Today we have Svitlanka on the show. She is the co-founder at Neofin, a lending automation platform that enables finance institutions to seamlessly launch and manage loan products with speed and efficiency. Under her leadership as Chief Operating Officer, Neofin has expanded into 11 countries across North America, Europe, and the Middle East. She's an alumna of primer FinTech programs, including Equifax, Accelerate, MasterCard, StartPath, and much more. These experiences have provided her with deep industry insight and a powerful global network. She has taken the stage at major FinTech conferences such as Money 2020 and competitions such as North America's WMN Tech, where she won the top 5. Outside of her working hours, she is a calisthenic athlete, competing in an Ontario provincial level, and an active supporter of social initiatives supporting prominent Ukrainian tech talents and connecting with global markets. Svitlanka, welcome to the show.
Thank you for the introduction and thank you for having me, Heather.
Thank you so much. I'm glad you're here. I would love to dive right in and talk a little bit about your journey and how you become a co-founder and started out as an entrepreneur.
Yeah, that's a good question. For me, it all started with my passion to sales. I'm a salesperson, and I still, even though I'm a co-founder already and I'm a CEO of a business, I still call myself a salesperson, and this is still the primary thing that I do. But I've been a sales in tech and international tech for over 10 years. At some point, I started getting the positions like head of sales, sales director, chief business development officer. And I just realized that this is probably the glass ceiling that I have reached as an employee. And I want more challenge. I want more responsibility. At that time, we have partnered with Max, who's now a co-founder at Neofin as well. By that moment, Max has already been an established entrepreneur, famous serial entrepreneur, managing a group of companies with an overall total revenue of 9 figures. And he has set up a family office to deploy certain capital for investments and to back businesses of Ukrainian origin, because we both are of Ukrainian origin. So his goal was and mission was to back the businesses of Ukrainian origin with global distribution. And I've become a GP in the family office. That's how I ended up as a board member in a company that is a fintech development company. So this is the company that is building software for financial institutions, such as, for example, Citibank. And all the time being a board member, I was very deeply involved in the processes. I was very deeply in the context of how everything is happening in that business. And I was always surprised and stressed with the fact that whenever you need to build any tech for financial institution, it takes 10 times longer than it should because of very legacy, old-fashioned systems that are used in the industry, especially in the North America. At the same time, the co-founder of mine, Alex, he used to be a CTO in one of the prominent banks in the Eastern Europe. And he has faced the same issue, but on the actual customer side, because as a bank CTO, he was experiencing a lot of challenging to launch a new loan program with the legacy systems that were on the market at the time. So at the same time, simultaneously, we had this idea of building something, building a system that we wish we had in the places we've been before. And that's how we joined forces. Alex invited me as a co-founder, firstly as a consultant in Neofin, and then but it quickly evolved into actually an invitation to step in as a co-founder and later as a CEO.
That's awesome. That's a wonderful journey, especially getting to learn from the family office side of things, bringing your sales background along, and now doing that and what you learned in family office for your own business.
Oh yeah, I feel like the family office experience is it has been a very important experience for me because it's a very natural middle chain between being an employee, being a sales executive, and being a co-founder. Because as a GP in the family office, you get very deeply in the context of the business structure, organizational structure, financial structure, and KPIs of the businesses. You understand how those businesses are built from the inside. You understand which challenge they're facing. You understand how they're actually using the capital that they're getting through investment. And this is a very important, I would say this is a very important stage after which I feel like I get more prepared to the role of a co-founder.
Absolutely, I'm sure. As you're digging into the meat and potatoes of what makes a business operate, I'd love to hear your thoughts on what you've seen that's really helped companies scale. What are some of the first operational systems that you focused on to help those areas out, or that you're looking for from a family office perspective?
I would say the first thing that I realized was how important the role of the founder was, because the businesses that succeeded in my practice were the businesses where the founders did not have that fear of going out there, going in the fields, directly talking to the customers, directly doing the customer development, and directly verifying and validating the niches their business needs to go and needs to go into. I've seen very different types of founders. They're very, very different. But there's one thing that probably united them all, and it was the resilience, and it was the ability to actually go out there and get those first customers. So that was a very important point. Another one, if we speak about scaling, is the adaptability of the business. Because if you want to scale geographically, for us at Neofin, this is a critical thing to be able to scale geographically, because we are a geography agnostic lending platform. So as a business, we need to have this ability to launch the lending operations in multiple geographies. Your business needs to be flexible and needs to be adaptable. It cannot be built on the hard-coded principles. It needs to be flexible. It needs to be dynamically adapted to various regulatory contours, to various regulatory landscapes, to various data climates, and so on. So I would say the adaptability of the business is a key to success.
So, as you're talking about that, what do you think one or two things that business owners could do to make sure that they are a little bit more adaptable and flexible?
I would say the first thing is to, especially if we're speaking about the financial industry, is to understand the regulatory landscape in the areas and in the geographies they are willing to operate in, and automate as much as they can automate on the compliance side and on the security side and so on. For us, it was very important that from the very beginning, we have implemented the automation, frequently the AI-driven automation on all the stages, all the layers of our business, to make sure that we can comply with the North American standards, we can comply with the European standards, we can comply with the Central Asian standards. So we integrated deeply with the platforms that were scanning everything we've been using as a distributed team, as a remote structure, So every time we needed, every time we were actually getting into the process of negotiation with the customer and in the process of evaluation with the customer, we're always, as a startup, especially an early stage startup, you're always in a risky position because you're competing with very established platforms that have been around for a long time and that look more reliable to businesses. So as an early stage startup founders, we need to make sure that the risk that our customers are facing when they make a decision to work with us is minimized. I think it is on us to make sure that their risk is minimized. So it is on us to take care of our compliance. It is on us to take care of our automation. And why I advocate for automation in the compliance space, because as an early stage founder, it is just impossible to keep your mind on top of everything, including compliance. So compliance is the very first thing that you can delegate to machines to deal with.
I love that. And, thinking about everything that founders have to do, anywhere that you can automate, get help with AI, outsource, I think most founders should do that because you can only do so many things well and very, very few things great. So I love what you're saying, and I love talking about how to automate some of those things. So, also, one other question that I have is around as you're growing a business and scaling, especially across multiple countries, what are some of the KPIs that you look at to make sure that the business is moving in the right direction?
For us, again, probably that's because this business is managed by a salesperson. For us, the main KPI is revenue. So since we have not involved any institutional investment after angel round that we had at a very, very early stage, revenue is actually our bread and butter. So this is everything we can rely on. That's why revenue is the main indicator, and the way we are setting up the revenue streams, the way we're managing those revenue processes, the way we work with the payment principles, the way we structure that in the contracts is very important for the business health and for the sustainability. The other indicator would be the number of actual signups. For us, we are a classical B2B land and infrastructure solution. So signing up for the system like ours is usually not a fast process. It's usually at least several months of selection process and evaluation where the customer is doing very detailed due diligence and comparison with the other platforms, and then a migration from the previous system to our system. So it's usually a lengthy process, right? That's why it is very important to track the number of those actual signups per quarter to understand if we're moving in the right direction, if we have sufficient number of those signups. So these are, I would say, the fact metrics. They're also the metrics that are they're the metrics that are related to the consequence, and there are the metrics that are related to cause. The metrics that are related to cause is actually what can generate revenue, what can generate signups to us. So the metrics that are related to cause are all around our sales funnel, what gets into the sales funnel, how many leads we're getting into the sales funnel, let's say per month, how many negotiations are happening at the given moment of time. And then there are the product KPIs, because every year and every quarter we have a certain product roadmap, and we understand how we want this product to evolve. So we are measuring the product metrics depending on which parts of the platform need to be updated and improved, which parts of the platform have been improved, which major releases have been done, if they have been done as planned or not, why, and so on. So that's probably the three groups of metrics that we would track.
That's some great insight there. And one of the things I'd like to dive into a little bit more, you were just talking about that roadmap and your product. So I think that's something that a lot of founders and small businesses really get hung up on, because we don't want to implement a product and get to using it, and then in 6 months it's obsolete or out of date. So how do you all structure some of your products to make sure that they are not obsolete in 6 months with tech turnover so fast right now?
Totally. That's a good question. I would say that for us, it is a very customer-driven strategy. So we are in touch with our customers. We talk to the customers that are in the sales funnel. We keep researching what are the trends in lending. I will provide you with an example. For example, our platform has supported historically multiple types of consumer loans. So we could launch the microfinance, we could launch small dollar loans, we could launch lifestyle loans or home improvement loans, and so on. And we noticed a trend of the revolving credit line. And it was so interesting because we noticed it coming from different areas at the same time. So we had the requests from the Eastern Europe, we had the requests for that from the North America. And then we realized that this is a trend, and more financial institutions are getting into the category of the revolving credit line. And then we noticed that some of the businesses that have been willing to launch their bespoke credit card program ended up launching a credit line instead due to the regulatory nuances. And we realized that, yeah, we need to have this product. We need to have the revolving credit line. So we first implemented it for the individuals, so for consumer loans as an unsecured lending in the Q1 2025. Then we added the same in Q2 2025. And at the moment, we have two big lending groups that are already working like in production with a revolving credit line. And we're getting more and more inquiries for that. So it was based on the customer insight. And I would say that the more we are basing on the customer insight, the more relevant it is to the market demand. But there's also an important thing here because if you base your roadmap fully on the customer insights, you have the risk of adjusting your platform to just one exact customer rather than the market in general. So it's important to have your vision. And my business partner, Alex, and the co-founder, he's doing his best to just keep that vision consistent. But at the same time, when we choose which product lines we want to go into, that would be based on the customer insight.
That is super smart, and I love that insight. Not just listening only to the customer, but knowing who you are as a company and making sure that that's at the forefront is crucial there. So you mentioned something a second ago that I was just thinking about as well around risk and compliance. So I know, coming from the finance world myself, one of the things that we always struggle with is speed in relation to compliance and risk and what it costs. So how have you all found to kind of balance some of that out so that you're hitting your compliance requirements, but it's also not killing the business in the process?
Oh, yeah, that's a really good question because especially knowing how much the compliance and certification costs right now, it can really kill a business, especially a small business or a startup on the early stage. So for us, it was a very important point. Like we decided we needed to decide on our compliance strategy from the early stage when we decided to go international. So when I joined, and the main reason why I was invited to join Neofin's founders group was to actually turn Neofin from a local Eastern European solution into an international platform that can serve companies from all over the world. And I understood that compliance was an important part for that. I would say that now we can say that there are key things that every tech business in the financial industry should do as a part of their hygiene. So these things are basics, and I would call them hygienic things. It's like brushing the teeth. It's just basics. And these things are firstly, get your ISO 27001. When you get your ISO 27001, the first ISO certification can take time. But the value from it is that in the process, when you're getting that certification, you're learning so many processes, and you need to build so many business processes, business rules, business policies, security policies, and so on, that it makes it so much easier to later get any needed compliance and get any needed certification. So start with 27001, start with the most basic SOC 2 type 1 compliance. That would be probably the basic, like the very, very basic things. And SOC 2 is a North American compliance, and it's not so sophisticated as, let's say, European GDPR. We have received GDPR, the European GDPR, that this year. It was like quite a process. We had to do 3,000 various business checks, and we had to fulfill 3,000 different criteria. But because we already had that experience of passing the North American certifications, which are, I would say, still a challenge, but not as much, not as radical. But we were already prepared. So I think that, like, ISO, the first ISO is basically a hygiene that any financial business can do. And speaking about the costs for us, we just realized when we started talking, from our first conversations with the customers, we realized that this certification is such a basis. It's a basic requirement in any inquiry that we participate in, any tender, any competition we participate in. But that was basically how we used our first angel checks.
I like that. The whole begin with the things that you're going to need to start with.
Exactly.
Yeah,
And
that way we
I
don't
will.
worry about it.
Yeah, and I will even tell you more. So we launched some products in the Middle East. Right now, we're working on quite a big launch in the Central Asia. We're like digitizing the major bank in the Central Asia, digitizing their lending processes, and we do need to comply with their local regulations. But all of those local regulations, they have about like 90% overlap with the basic ISO requirements. So as long as you have this ISO, it gives you such a good practical training to further scale.
That's smart. So then you only have a small hill to climb because you've already done
Exactly.
the majority of the big work.
Yeah. That's how it works.
I love that. And it gives you such a good foundation. So with those things in place, what have you found to be a challenge as you've scaled into all of these other countries and different markets?
I would say the challenge is getting those first customers in, especially when we pivoted so we started firstly targeting the smaller lenders, like small lenders, like credit unions, community banks, and so on. Then we quickly pivoted from that audience to bigger companies because we realized that our key value is the ability to launch multiple loan products and not necessarily in one geography. If we speak about the companies that operate in multiple geographies, this is a different scale of business. This is an enterprise business. And for an early stage startup to get an enterprise business signed, it's a challenge. I would say that this is a challenge for any, salesperson and for any business founder. So getting those first partnerships and those first case studies was probably the most challenging thing. But as long as you get the first ones, making sure that you deliver on a high quality level, making sure that you actually build a good case study out of it, is the next thing to take care of. And then you can use that case study to actually scale your customer base.
I like that, and I think it's super important to get those first customers. But one thing I'm always looking at as well is how do you balance all of this out, right? How do you balance getting these initial customers, doing the sales and the marketing, but also making sure that you have operations in place to support it and the finances to back it up? So, how have you found to kind of keep all of those things moving in the right direction at once without growing a massive team?
Um, I would say I would call that very wise hires. We try to hire not much, but when we do that, we try to do this wisely. The product and technical hires, we don't hire much again, but recently we've decided to take a focus on delivery. So we decided to increase. Right now we have, like, in our tiny technical team, we have 3 delivery managers. Why? Because we feel like this is the area that would actually drive the case studies for us. That's why we need that. So we decided to focus on deliveries, on delivery. Then, speaking about the administrative structure, as you can imagine, we do not have any, large administrative structure, but getting the right manager on the finance side, and right legal support has been important here too.
Absolutely. I think all of that has to kind of work hand in hand. And
Oh yeah,
it's really easy sometimes to see one department kind of getting ahead of the others. And
yeah,
then in order to truly move quickly, they all kind of have to walk in lockstep together.
yeah, yeah, for sure.
So, one other question I have, working in family offices, being a co-founder, what are some of the operational and finance mistakes that you've seen early on as businesses are just getting started?
Um, Firstly, is overly relying on the metrics that are not grounded. When we started our conversation, I mentioned that there are the metrics that are related to cause and there are the metrics that are related to consequence. There's another type of metrics which are related to, let's say, startup traction. They create a beautiful story like, hey, we have this like 20 letters of intent signed, or we have this like 10,000 new views on our latest demo video, on YouTube, or we have this number of social media followers count, and people would rely on it because all of those things, they sound exciting, right? Oh, we have so many followers, so it means that people are interested in our business. So the businesses, especially at the early stage and especially at the pre-revenue stage, they tend to use those metrics that I usually call them nice marketing metrics. They tend to use them to actually build their real business projections. But then at the end of the day, it turns out that, there are 10,000 viewers on this demo video on YouTube, but 0 demo subscriptions. So these are not the metrics that are actually impacting your business and that are actually impacting your financial structure. And as an early stage founder, I know that from my own experience, I know it perfectly. Like, you get extremely excited from those metrics. Oh, we're getting traction. Oh, people are paying attention to your business. I remember how we went live in the US. We went live in the US at the end of 2023. Not at the end. It was August 2023. I remember that moment very, very well. And our press release, we just published a press release with Yahoo Finance that we went live. And our press release has been reposted by 200 media. And I remember it was such an exciting period for me. I was like, oh, amazing, 200 various media assets repost our release, our press release. Everyone is so excited to see us on the US market. Then we probably should project more US leads or more US customers coming from this area. No, no, these are totally different things. There is the publicity, there are the beautiful marketing stories, and there are the actual real business metrics that are coming from real business actions, from the real conversations with real customers, from the real sales funnel, from the evaluation of those sales funnel and division of the sales funnel on the stages. Who's on the consideration stage? Who's on the decision making stage? Who's on the signing stage? And only those are the metrics that I can use to build projections on my business, not the number of media that reposted my press release, no matter how exciting it sounds.
That's a wonderful example, and I love that because it shows two different sides, right? So I hate seeing metrics that you're not really taking any action on. But I also want to make sure that people aren't using metrics that don't really drive at their bottom line numbers. So I love what you're saying. I think that's right on. And it's wonderful for people to hear there's multiple different ways to look at it, and you have to know your business, figure out what works for you, and then keep your eye on it, whether it's revenue, whether it's net profit, which is my favorite because I've always
Oh yeah,
believed, yeah.
finance, of course.
Yeah. Well, I think, I've always said, and I heard multiple other places, revenue is for vanity and cash flow is for sanity because we got to pay the bills at the end of the day. And as a founder and an entrepreneur, we want to get paid as well. It
Oh
stinks to
yeah,
work all those hours and not have anything to show for
for sure.
it. Yeah. So, one final question. It's been a great conversation. I would love to hear what's one secret that you wish you would have known as you started out as an entrepreneur?
Um, one secret, probably one secret would be that there's never going to be a comfortable and stable spot because there's always a temptation and you think, okay, when we get to 1 million revenue, then I can delegate more things to the other salespeople and I can get more chill and things like that. But no, the market is constantly developing. No matter if we are at 1 million revenue where we are now, if we are at 5 million revenue where we are targeting in hopefully nearest time, uh, or if we are at 10 million revenue and so on, the market is so dynamic. The market is constantly moving and developing and evolving. People are changing, the demands are changing. So I understand that falling for that illusion that, okay, we'll get to this milestone and then you can chill. No, it's not going to work like that unless you stay as you remain an entrepreneur. You do not exit, you do not switch to this, a board member, non-operational role or anything like that. As long as you are an operational C-level entrepreneur, the market will always need you.
Absolutely. I love what you're saying there. I was listening to a YouTube video this morning as I was getting ready, and it was Alex Harmozy, I think it was, talking about that exact thing about the journey. As an
Yeah,
entrepreneur, there is no cap, there is no getting there. It's just you have to embrace where you're at and enjoy the journey.
yeah, yeah, absolutely.
Well, today has been a great conversation. I've really enjoyed it. So, before we wrap up, if our listeners want to connect with you, what is the best way for them to reach out and get a hold of you and learn more about what you all are doing?
So the best way to reach out to me is LinkedIn. But I'm happy to leave my LinkedIn profile details. It's Svitlanka Sergiichuk, and the best way to learn about Neofin is our website, neo-fin.com. Feel free to check it out. Feel free to book a call with us right from there. It takes just 2 seconds.
Awesome. Well, thank you so much. And thank you, everybody, for listening. If you found today's conversation as valuable as I have, be sure to hit that like and follow button and share with somebody who is trying to build a business. If you want more tips in between episodes, be sure to give us a follow on C Suite Insiders on Facebook. And until next time, keep growing and remember, you don't have to do it alone.